Hi, I'm Amit Bhalla, manager with the transfer pricing practice. As far as my wish list for budget 2015 is concerned from the transfer pricing perspective, it has divided in two parts. One is for the domestic transfer pricing provisions perspective, and the other is for the international transfer pricing perspective. As far as the domestic transfer pricing provisions are concerned, my suggestion to the finance minister is to increase the threshold limit for the application of DTP provisions from 5 crore to 10 crore. Since the domestic transfer pricing provisions are in its inception stage, so there are certain grey areas with regard to the transactions that are required to be reported, and there are certain terms which are not appropriately defined in the law itself. One of them is the indirect shareholding, whether the transactions with a company having its indirect shareholdings are required to be reported or not. There's a term called close connection, which is nowhere appropriately defined in the transfer pricing regulations as far as section 80 IA and other pertinent sections are concerned, and whether the transactions related to capital expenditure under section 40A2B are required to be disclosed or not. The other thing which I believe that needs to be introduced in the domestic transfer pricing provisions is the correlative relief. I mean, if the TPO at the end of the assessment makes some adjustment, upward adjustment in one entity, a corresponding relief is supposed to be given to the other entity with whom the transaction is being undertaken. Otherwise, this would eventually lead to the double taxation. Well, in international transfer pricing provisions, appropriate guidelines should be laid down with respect to the location savings, intangibles, as well as in the selection of comparables. The another area where I believe that Indian transfer pricing provisions are delightfully vague, and where there is a very fundamental lack of clarity, is with regard to the economic adjustment. It has been observed in the past that the tax authorities do not accept these kind of adjustments. So CBDT should come up with a position paper which clearly states that what all adjustments can be made, under what circumstances these adjustments can be made. The broad adjustment which the taxpayer generally seek is with relation to the depreciation, risk adjustment, working capital adjustment, or the difference in the accounting policy. The only adjustment which has been accepted by the tax authorities only at the tribunal level is in relation to the working capital adjustment. So I believe the tax authorities should understand the business intricacies of the taxpayer and accordingly should allow or grant the taxpayer for making these adjustments. Thank you very much.